Hi, I'm Alex. Welcome to the channel and thanks for tuning in. So in today's video, we're going to be talking about the latest EV SPAC that everyone seems to be talking about. It's DiamondPeak's acquisition of Lordstown Motor Company. Yes, this is the same Lordstown that Workhorse have a 10% stake in. And in this video, we're going to look at a couple of things in real detail about what it really means for Workhorse. So if you're interested in that, then definitely stick around. Now, in my previous video on Workhorse, I did actually mention that this deal was a possibility. So it's nice to see that come true. And I've got to go back to the crystal ball now to see what's coming next. If you haven't checked out my previous videos, links are in the description below. I think you'll find them interesting. This video will follow the same structure that I have in all my SPAC videos. First of all, what the company is and what they do. Next, what the transaction is. Then, what are the really key things that we need to know and need to be aware of as investors. Then we're going to touch on what this exactly means for Workhorse. And I haven't seen anyone else yet analyse this correctly. But if you are an investor in Workhorse, it's really important to understand that. And then finally, what I'm doing. So please smash the like button. It's really helpful in pushing this channel to a wider audience. It's also helpful in trying to rectify the damage done to the like-dislike ratio after sharing honest, but not as optimistic as many other people were, opinions and views on certain quite popular stocks. So that's massively appreciated. If you like investing related content, then subscribe to the channel. I have loads more interesting videos coming on SPACs, penny stocks, growth stocks, tech stocks, as well as a number of videos that will help you become a better investor, where I share the experience I've gained in my full-time job as a professional investor with you to help you use those approaches in your investing. As always, I'm not a financial advisor, and this video is purely for entertainment and educational purposes only. So let's get straight into it. Who is Lordstown Motor Company? Lordstown Motor Company is a manufacturer of fully electric, light-duty pickup trucks, primarily for commercial applications. They currently have one vehicle that's approaching production, the Endurance. It's a fully electric vehicle which has the lowest number of moving parts for any vehicle ever manufactured. This makes maintenance and repairs much easier and is great for business customers who have large fleets. They're based in Ohio and they manufacture from the Lordstown assembly plant, which they recently acquired from General Motors. They were founded by Steve Burns, who's actually the ex-CEO and ex-co-founder of Workhorse. And Lordstown Motor Company will actually still rely on Workhorse for a number of things, but we'll come on to those in more detail in a minute. So what is the transaction? Well, on the 3rd of August, DiamondPeak Holding Corp, a SPAC, a special purpose acquisition company or a blank check company, stated its intention to merge with Lordstown Motor Company. Once this deal is complete, the ticker would change to RIDE, and the deal implies an equity value of around $1.6 billion. The deal is being funded by $280 million that the SPAC has in trust, as well as an additional $500 million coming from PIPE investors. Now, some of these investors in the PIPE are really well known. For example, BlackRock and Fidelity, and additionally, a really important strategic player has also invested in that PIPE. General Motors. This is really important to the whole deal, and we'll come on to why that is the case in a minute as well. So, what are the important things we need to know as investors? Well, firstly, we need to think about the market. And we don't need to spend too much time on this because the dynamics and the proposition is pretty clear. There's going to be a massive growth in electric vehicles and carbon neutral vehicles over the coming years, and it's going to play an increasingly important role in the automotive sector going forward. In addition, it's important for companies to be adopting more green technology, as it's so important for their own ESG principles. In this respect, Lordstown Motor Company is well positioned to capitalise on those market trends over the coming years. Then we need to think about Lordstown Motor Company's positioning in the market. Well, they have a degree of first mover advantage here. Now hear me out on this one, because it's not the first name that everyone thinks of when they think of this market. The sector is clearly competitive. There's lots of names all competing to be the leading manufacturer in terms of market share of electric pickup vehicles. However, Lordstown's claiming that they have orders of approximately $1.4 billion. That equates to orders for around 27,000 trucks, which if that's true, that's impressive. They also suggest that the average order size per customer is 300 trucks, so there's a clear focus on the commercial market here. They also claim that they'll be first to market with their product and that they'll be cheaper than competition as well. And when you're targeting the commercial sector, those are both particularly important considerations. Personally, I like the commercial focus that Lordstown Motor Company has. When you're selling pickups to companies, they're typically mission critical purchases. Those trucks are either being bought so the business can expand, or alternatively they're being purchased to replace existing ones, which are either broken or no longer efficient. It's less of a discretionary purchase. When you're selling to consumers, it's an expensive purchase and it all comes out of discretionary income. And when you think about where we are currently in the market, with unemployment rising and disposable incomes falling, it's going to become a particularly challenging part of the market. When you're selling commercially as well, they have different selling relationships and the customers are typically stickier. Lordstown Motor Company also has its own factory. That's also a differentiator in this market, believe it or not, versus some players who currently only seem to have computer designs of their vehicles. This factory has a history of mass production of vehicles. In its history, it's produced over 16 million vehicles. Now, what's important to bear in mind here is this factory does require some adjustments before it can be used to produce electric vehicles. However, for this, management have laid out a clear cost plan. This is reassuring. It's clearly had a lot of consideration. However, my personal view is that, as is always the case with these things, it will overrun and it won't come in on budget, but it still is good to see that plan in place. Next up, we need to think about the intellectual property, the IP, and the partnerships they have. Now, this is particularly important for Lordstown Motor Company because they don't have much IP themselves. Now, this can definitely be seen as a weakness, especially if they have too much reliance on only one company for that IP. As you can see here, Lordstown listed a number of blue chip names as partnerships: Samsung, Goodyear, Elaf, alongside Workhorse and General Motors. Now this is important to remember, they are licensing IP from others. That means when they use it, they have to pay. It's also important to note here how much reliance they have on General Motors. General Motors is essential for many of the parts. Now this is good, a number of them have been tested, have been approved, are working. However, at the same time, it does come with risks. Now what's reassuring here is that General Motors themselves have invested in the pipe. So in that sense, incentives have been financially aligned. That's always good. Next up, we need to think about timing. Now, management have laid out a very aggressive plan in terms of how many vehicles over what period of time they'll be able to manufacture. Based on this and knowing their current order backlog, assuming no new purchases, that backlog will be cleared by Q3 2021. Now, personally, I'll believe that when I see it. What we're looking at here is an absolute best case scenario, and it very, very rarely goes to plan like this. So I'm expecting some setbacks to this. One thing to bear in mind with this as well is that any setback or any delays to this, missing production targets, all results in news that comes out with a negative sentiment, and as always, that's likely to have impacts on the share price. And then we need to think about valuation. Now, the first thing to remember here is that this is a SPAC. It's an EV SPAC. The sector's had so much hype that actually the valuation rulebook can pretty much be torn up here. We've seen so many EV SPACs explode in price with very few financial fundamentals underpinning that. One thing to bear in mind is that there is a huge amount of execution risk here. Yes, whilst this might be perceived to be less than some other EV SPAC plays, you can't ignore the fact that there is still that risk. And ultimately that all does feed through to the share price and the valuation. Now on a comparative basis, when compared to peers, it does seem to be valued fairly on an EV sales multiple and an EV EBITDA basis. Even when compared to Tesla, this all does seem in line. However, when you're looking at these figures, it's important to remember that these are calculated on the basis of the $10 offering price. Any increase in that share price obviously drives up the enterprise value and increases the multiple. And so before making an investment, you should definitely sense check against those. Now, the other thing here to really bear in mind as well is the potential that Lordstown Motor Company may be the recipient of a $250 million loan. The Advanced Technology Vehicles Manufacturing Loan Program is a US government scheme which could see Lordstown receive a loan for $250 million. And this is so interesting to watch because we saw what happened to the share price with Kodak when they were linked with a government loan. So this is definitely one to keep our eyes peeled on. So, what does this mean for Workhorse? Now, there's two main ways that this affects Workhorse. However, both of them are ultimately related to the IP licensing agreement that was made. From that, Workhorse has a 10% stake in Lordstown Motor Company. I've discussed this in way more detail in some of my previous videos, so if you want to get your head around that a bit more, then check those out. However, on a pro forma ownership basis, post-deal, Workhorse owns 4.8% of the new SPAC. Assuming that $10 valuation price point, that equates to around $79 million to Workhorse. However, no shareholders have sold their shares in Lordstown Motor Company, so ultimately no cash has flown to Workhorse. All that happens is the value that they're holding that investment in their balance sheet has increased, and we'll see this in the next earnings that Workhorse release. So from this, there's no cash benefit. What's more is that Workhorse won't be able to sell its shares for a period of time. They're subject to the lock-up period as well. So for a period of say 6 to 12 months, depending on what the documentation says, Workhorse won't be able to sell any shares in this SPAC. Personally, I think it actually makes sense for them to hold this stake as a strategic investment. However, it is a useful tool if Workhorse does need cash quickly and it doesn't want to go down the route of, say, raising more equity or alternatively raising debt. Next up is the 1% prepayment that Workhorse is entitled to from LMC. This is 1% on the first 200,000 vehicles that LMC sold. What was also stated is that this could be prepaid by any money raised by Lordstown Motor Company, either via debt or equity, up to the same value of that 1% of sales of the 200,000 vehicles. Given what we've seen so far, it's unclear whether this transaction has triggered that and whether that cash has flown to Workhorse now or not. However, that's something I'm going to keep a close eye on. I'm going to dig into the documentation when it's available, and I'll provide an update as and when we know more. So, what am I doing? Well, in this one, I've taken a very small speculative position again, acknowledging that it's an EV SPAC, that there's going to be a lot of hype around it, and that ultimately anything could happen. I do like their positioning versus some of the other EV SPACs that I haven't invested into. I like the fact they're quite close to production. I like the commercial market focus. I think they have a good management team. What you can't forget though, however, is the competitive dynamics, the execution risk, and the risk that setbacks and delays will have on news flow and what that will mean for the share price. So I've taken a very small stake, acknowledging it's a complete speculative play. What I do know, however, is I think this one will be a really interesting one to watch. So look, thank you so much for watching. I really appreciate it. If you like the video, please smash the like button. If you like investing related content, then subscribe to the channel. And as always, let me know your thoughts in the comment section below. I find it so interesting what everyone has to say. So thank you so much for watching, and I'll see you in another video.